Good morning, everyone. David Paul speaking, Managing Director of VectorVest in the UK. And I don't need to remind you of the carnage that's happened in markets over the last few days. I'm sure you've all read about that. I'm a trader, I'm not an economist. But to me, it looks as if there's more pain to come. We shall see. What I want to try and talk about this morning very quickly is how we could use proprietary VectorVest metric called the market timing indicator to give us an indication when there's trouble ahead. I'm putting up the UK market, and that's the VectorVest composite of the UK market over the last year. So it's put together in candles, and as you can see, the market has pretty much gone nowhere in the last year. For most of 2022, making a series of falling tops, and overlaid on the VectorVest composite, we've got our longest term measure of the market called confirmed calls. And that long-term measure of the market is still up, believe it or not. It turned up on the 5th of November last year, and it's still up. Now, we have shorter term measures of the market that move up and down that are suitable for swing traders, but the confirmed call does a good job for position traders. Now, down below the price, we have the proprietary market timing indicator. And the market timing indicator is unique in that it's made up of two things. It's made up of the price of the VectorVest composite, the momentum of the VectorVest composite, and the momentum of the breadth of the market, which is, the breadth of the market is in fact measured with our proprietary ratio, the buy-sell ratio, the number of shares on a VectorVest buy divided by the number of shares on a VectorVest sell. So three things going into the MTI. Now, it's on a scale between 0 and 2. And we've found, ladies and gentlemen, that when the MTI gets down towards the 0.6, 0.65 area, that's always historically a good time to be thinking of buying stocks. And when the MTI gets up to about 1.6, that's a good time, certainly if you're a short-term swing trader, to be actually selling into that strength. And in the next slide, I've tried to put some numbers to that. So the top line on the chart is 1.55. Now, the UK market doesn't get as excited as the American market. So the American market can become more overbought than the UK market. When the UK market gets up to about 1.5, it's time to be careful. Canada's pretty much the same. Australia's pretty much the same. In the US, the MTI can run to 1.6. So where I've drawn that horizontal line, as you can see, that would have been a great place to have, in fact, become certainly not buying any more stocks and becoming very careful about open profits. And that's exactly what we saw a few weeks ago. Now, invariably, there is accumulation at the lows, and invariably we see some form of divergence on the MTI between the price at lows. So way back in July last year, June, July last year, we saw the composite go sideways and the MTI move up from an oversold position where the MTI got down to about 0.6. And then when we get some form of confirmation from the market, invariably that's a good place for swing traders to get in. I've marked our longest term signal, but the shorter term signals were all firing a buy well before that. Similarly, in October, markets made a low, but the old MTI couldn't follow, and it made a rising low from an oversold position, and then we got a signal from the market. Unfortunately, at the moment, folks, it looks as if this can go quite a bit lower. So time will tell, but invariably a downswing finishes where the price makes a falling low and the MTI makes a rising low. And we're still a long way off that. As you can see at the moment, the price has made a falling low and the MTI has made a falling low, which is saying that momentum of both the price of the composite and the breadth of the market is actually moving to the downside. So we have to be very careful. I think we're a long way off a new buy signal, even in the shortest term in the UK market. So certainly for swing traders, the MTI can be used to get into positions very early and to get out of positions selling into strength. Incredibly useful if you're trading illiquid positions, small stocks, or you've got a huge account where you can actually sell when everybody else is running in. So let's look at the US market now, and that's the US market. Now, in the US market, the longest term measure of the trend has turned down, has been down now for 2 weeks. So our confirmed signals have called the American market exceptionally well. Now, that horizontal line that you can see on the MTI is drawn a little bit further north on the American market because research going back for the last 30 years shows that when it gets up to about 1.6, above 1.6, then we're in a mega overbought situation. And it's always a good place. Well, it's a good place not to be buying any more stock. It's a good place if you're a swing trader to be selling into strength. As you can see, invariably at a major low, the price will make a falling low, but the indicator will make a rising low from an oversold position. And that oversold position down around about the 0.6 on a scale between 0 and 2. So we saw that again in October. And we've still got a way to go before we're going to see that again. Clearly, markets can make a V bottom, but invariably at major bottoms, and I think that there's a major bottom ahead probably, but there's no sign of it as yet. So, ladies and gentlemen, even for the most aggressive traders on an end of day basis, I think that we should be very careful, watch stops very carefully indeed, and not buy into any new positions until we see some form of divergence between the price and the market timing indicator. I think that you can continue to take intraday trades, both long and short, as the situation arises. But in my intraday trading, I think I'll be taking most of my positions on the short side until that changes. So pretty negative report, ladies and gentlemen. Probably a bit more pain to go before we make a bottom. There's no sign of a bottom on either the US or the American markets. Thanks very much indeed. I hope to bring you some better news the next time I'm here.